The whole reason why I made money on this panic today was because I know the stock's personalities.
How's it going, traders? My name is Matthew Monaco, and I will be the host of Twist, which stands for This Week in Steady Trade. The goal of these episodes is to have about a 15 to 20 minute show where I have on hosts such as Kyle Williams and Jack Kellogg, and we can discuss what's happening this week. We'll go over stocks that are moving, trades they took, some lessons they've learned, and overall just talk about what's working in the market to hopefully help you guys learn and become more consistently profitable traders. In this episode, we talked about 4 stocks: ICD, WORX, CYDY, and BIOC. Jack and Kyle traded a lot of these stocks, so they talked about their trades, their thought processes, what they risked, and just the overall thesis on these trades. It's truly a great episode, so let's dive right in. Well, let's do this.
Kyle, you can start it off.
Yeah, so, how's it going, guys? How are you?
I'm good. This week's much better than last week for me, I'll say.
Well, that's good to hear.
My week's going pretty good. I capitalized really nicely yesterday. Monday was a little slower, and today was just kind of average, pretty good. But
sweet, love to hear it. So like, what are you guys seeing happening like right now in the market? What plays are working? What's not working? I know you both, you both started with OTCs like a year ago, 2 years ago. Now you're more enlisted. Want to touch on that just for a second?
So yeah, at the end of end of February all through March, and then the end of March, we had like this huge Corona mania, probably like the peak of it, I would say. Maybe we get more of it coming, but we had like a lot of it happen then. And then into the first week of April was still busy. And then the second week of April, I found it to be super slow. Like I took 3 trades over the course of that entire week through April. What was it? April 6th through 10th. We had Good Friday off, but so that 4 days of the week, I traded like 2 or 3 times, which isn't usually like me. Usually I'm taking at least maybe 5 to 10. So way down, it was super slow. But then this week, everything kind of popped back up. Like I took like 2 trades on Monday, 3 or 6 trades yesterday, 2 trades today, or 3 trades today. So it's definitely coming back up, but nothing necessarily super, super ideal. There are a lot of runners. But for me, I'm still kind of taking just standard size. I'm not really pushing anything. Just a lot of plays, but nothing amazing,
For me, I've kind of transitioned more into NASDAQ trading. I traded 80% NASDAQ stocks as of last month, whereas like I would only trade OTC last year. And just to start the year with, like Kyle was saying, with all the coronavirus stocks, they've just been going off, and there's been a lot more opportunity in the NASDAQs. We haven't really seen too many coronavirus OTC runners other than DECN and TOMZ, which were somewhat ideal, but other than that, it's just been really a liquid in OTC. So I focused most of my time shorting NASDAQs. When they get extended, I've been really good at shorting the multi-day runners and kind of understanding the framework of it, where it's kind of the first green day, the breakout, the dip buy after the crash, the first red day, obviously, and then the first green day after a long daily downtrend, and just kind of capitalizing through that 7-step framework that Sykes teaches. And as of being hot and cold, it's been really hot in March. It was my best month ever. And before February was even really good. But I've been able to keep some pretty good consistency so far in April, but I've just seen a little bit less ideal of setups.
Gotcha. Yeah, so I thought we could dive into just some stocks, some stock charts. And I know you guys traded a couple of these. A lot of these, I think most of them besides ICD are like coronavirus runners, some type of coronavirus news. Yeah. But ICD was a drilling company, and it started running this week. When do you guys get, I know you guys are both short sellers and you like to short them once they get overextended. So at what point does a stock like ICD get interesting for you guys?
I actually didn't trade this at all, but there were a few times I got very interested, and then ultimately one time I just totally missed it. The first time I got interested was after the first green day because it had such that high wick on the guy on the left there. And so I thought because it was so sold off, the odds of it being able to come back was really low. But then you scroll over to the second day there, go to the next day, and it spiked. I either didn't have borrows, something happened to where I just didn't really care to short it. And then it kept holding up, as you see, and then into the close, it ends up breaking out. So like at that point, I'm like, holy crap, like this is going to go even higher. So then come into the first red day, this action right here, me and Jack were actually talking on the phone when this happened. And I kind of maybe got caught too much of a bias that because it died so much on the first green day and then squeezed back on the second, I kind of thought there were more people trapped than there really was. So I thought it was almost going to have a third green day. I thought it was going to go over like 16 plus, considering that first like morning spike right at the first minute. But then what was I think 13 was the red green level, and you see that little pop right there on the fourth candle right there. Yeah, right there. That was for me when I saw it. I was like, this is a perfect entry. But I just got cold feet. I just didn't take it. Kind of still was kind of scared of how low of a float it was and thought I could come back, or was hoping it, kind of almost secretly hoping it would come back to go higher. And so I completely missed it. But, looking in hindsight, like that was the entry, that little pop right there. And then, not even 30 minutes later, you're up 10, 20%. So.
Sweet. Yeah, Jack, I know you took a long trade here into the end of the day on the 13th. What are your thoughts there?
So I've traded the stock for the last 4 days. This has probably been my most active ticker. And for this day specifically that you're looking at, I was short some around that high 9 area at the market open. Mm-hmm. And it kind of faded down a little bit. And luckily I covered a decent amount of my shares, around $8. And then once it squeezed over 10, I was out, and that was just kind of a small gain on it. And then I kind of shorted some of those lower highs after that parabolic move and covered back down into some of those dips. And then later in the day, I kind of left it low in midday, but then when it was perking up, it just kind of looked like a perfect breakout chart on the 2-day 5-minute.
Yep, definitely does there.
So right into the close there, I didn't grab the small position because I'm not really comfortable going long, but I just grabbed about 500 shares. Sold half for $1 a share and sold the other half for $2 a share. It was a really quick 15-minute trade, and I was done with it.
And then did you end up shorting it on the first red day there?
Yeah, I had a really nice trade on it yesterday. I have the executions on my Twitter if anyone wants to see specifically, but I'll try to explain it.
Yeah, I had them pulled up actually. Yeah, so real nice. Just you started in pre-market, is it? And then you sized into the pops.
Yeah, beautiful. So I had just put on 200 shares right into that $12 pop. It was like $12.20, 200 shares, and I was risking the previous high day. And it popped up, and it's just like a low nano float. So the action at the open is just so all over the place that it kind of spiked. And I'm not gonna add way up at the top of the spike there because I'm going for a first red day setup and I want to see weakness. So after it had its hard slam all the way down, then I'm interested in pops if the level 2 and tape confirms to me around that high $12, $13 area. It's going to reject there. And then from there, I just scaled in and added to a winner. And I was very patient, which I was happy with. And I covered down into that $10 crack in the high 9s. And then I got out the rest of it when the volume came in late day.
Awesome. So now WORX. Now this one's coronavirus, so there's still a little sector momentum there, but obviously it's been dying down because that's been going on for like a month now. So after the first day, this wild run, just guys start getting into it on this the gap down, the overextended gap down type play here. Was that what you guys were thinking?
Yeah, for me, I mean, I make money trading overextended gap downs, but they're not my favorite because of things like WORX, where if it didn't have that spike after the first 30 minutes there, like I wouldn't have traded it. I don't really usually feel comfortable getting short pre-market too much, at least too much size, because I've seen too many moves where the volume is less, so then it just squeezes right back green. All of a sudden, it's not an overextended gap down anymore. So I usually do my best to wait for the open, but unfortunately, in WORX case, by the time the open comes around, it's already down. I think what was the previous close? Was it like 12 or 13? And it opens up at 10. It's like it's already down 30%. I'm just not gonna short down there. And so I usually have to wait for a spike. Now, luckily, it did spike over 10, 10.50, then on to 8.11. I ended up having a 10.30 average. My original risk was for it to go to 12. I was fully prepared for it to go to touch red green. But once it topped out of 11, then that was my new risk. I added on to that next perk, the next lower high, right after it topped at 11. And then I just stayed patient, stuck to that plan. And once it started testing, nines and then had that panic into like the high eights, I was all covered. Didn't really want to stay too greedy for a new low a day. So
how do you determine just your risk level? You mentioned red, green, previous day's highs. How do you, pick which level you actually want to risk off of on these plays?
So the higher odds play is definitely previous highs, like, risking having open at 10 and then risking, 15 or 14.50, wherever it was, wherever the next day's high was. It's very unlikely it's going to get back up there, but then your risk reward is incredibly, wide, almost too wide, to the point where taking a trade doesn't necessarily make sense. So in WORX case, because the gap down was so large and because it would need such a large spike even to get to red green, I was comfortable risking red green, because if it spiked from 9 to 12 like straight up, I'm knowing red green's probably going to fail, or it's going to have a quick fake up, maybe spike to like 12.10 and then fail, which I could read that in the short time frame. So in worst case, it was red green, but if it's another ticker that only gapped down 5% and the next previous day high is only another 5%, so it was only a 10% difference versus 10 to 14, which is like 40%. I would risk previous day high on that case, but for worst case, I had to pick red green for risk reward wise.
Jackie, have anything you want to add for WORX?
The way that I traded WORX is I actually got chewed up a little bit on the front side the day before, but the overextended gap down day, I actually had put some on pre-market, and I covered that down into the morning wash down there at $8. So that immediately gave me about a $1,200 cushion. And then I dip bought some into the panic, and I kind of sold into the low nines there. So I gave myself even more of a cushion. And then I used that cushion to short the pops back into green to red, fully expecting just to kind of add into the pops. And then once it topped out, then I can kind of figure out how much exactly I'm going to be risking. And then from there, I added to the winner a little bit, and I covered into the dips down back into the support level.
Nice. Why did you start into this pre-market instead of like waiting for the open or morning spike like that?
I just thought right away that I could short it I shorted it at 1090 with 500 shares, and 500 shares is something I'm completely okay risking on an overextended gap down. So I got in at 11 and I was risking 12 on the pre-market position. And then I knew that if it did have a morning wash instead of a morning spike, I want to capitalize on that. Whereas if it did have a morning spike all the way up to red to green, then I can kind of add a little bit more if it got close enough and then write it down. But if it had that morning washout, I want to be able to capitalize on it. So that's kind of what I did. And then we actually got a really nice spike. So I got 2 nice trades on it.
Nice. Well done. I'm going to jump over to Sydney. So this one is a OTC, unlike all the other ones we've looked at so far, which are listed. So do you guys approach OTCs any differently? Or what were your thoughts on this? I think you guys both shorted it this morning.
Yeah. I guess overall approach is, we know most of these, even listed or OTC, usually pull back. Like just the framework itself of like a supernova, we know most of these are going to pull back. It's whether you can time the pullback that kind of dictates if you can profit or not. But with OTCs, I'm a little bit more aggressive because just from a fundamental standpoint, like, being on a NASDAQ or the New York Stock Exchange or even the Amex, like there's stricter requirements to how a company needs to be ran. And there's a purpose for that to make a company more legit or more successful in business. So the OTC markets having less of those requirements ultimately just naturally leads to kind of, crappier companies. I hate to put it that way, but it just kind of is. So you're going to find more companies that are a little bit harder to believe. CYDY being one of them. I'm not too much in the financials, but they're, a typical, pharmaceutical company, like they don't have right. They're trying to create a drug for this virus. So it's like, maybe they do. And if they do, great. It's going to go up to who knows how high, but it's like, until then, it's just a trading vehicle, right? And so for it to go to 1 to 3 to 350 without any significant pullback, we had a few pullbacks. We've seen we touched $2 twice now. But I think that's kind of the thought process me and Jack had. It's like, yes, it's up. Yes, it's got good news, but it's guilty and proven innocent kind of thing. That's how I approach it. So.
Jack, you flipped. Well, you started short, and then you ended up dip buying, and you flipped to the dip buy. What are just some indicators that for OTCs that you know it's time to cover your short and then perhaps flip to the long side?
For CYDY's case specifically, you don't have VWAP on your chart, but for the last few days, it's kind of had the morning spike and then it went sideways. So I've kind of been swinging a position from the high twos on CYDY. And then I had a day trade position for yesterday that I wanted to kind of cover today, or maybe even get that $2 crack. So in my day trade position, I didn't cover until 225 because that's kind of when it had its spike off its lows and started going sideways above VWAP instead of below VWAP. So that kind of was like the first sign that, okay, it might kind of be reversing. I don't know how high the bounce is going to go, but I think it's kind of set up for the $2 crack, just in my opinion, unless there's some amazing catalyst. But right now there's a stupid amount of bag holders up in that $3 range. So for me, I'm holding my position from 280 as my swing position, and I'm actually overnight long because I think that it's going to gap up and potentially have a spike, but I'm still holding my short because I think long term it's going under 2. So just kind of trading the bigger picture and the smaller picture at the same time can yield more profits. And that's what you can kind of do once you get more experience. You can kind of see how these things move up and down and just taking advantage of the names, both volatility, long and short. And that's kind of what I've gotten a lot more comfortable doing this year, is trading around a core. And which is also like, it's kind of like scalping and having a bigger picture position at the same time. So that's my approach on CYDY. We'll see what happens. I'm always going to be reactive to the price action. I don't really know what's going to go on in CYDY. I'm just sticking my plans that I've made.
I want to make a quick point about CYDY because this is a good example of how people have heard different stocks have different personalities, but there usually isn't many good examples of that. But I think CYD was a perfect example of that, because the whole reason why I made money on this panic today was because I know the stock's personality. So if you look at the chart there on the beginning of February, you saw how, or even late January, it spikes from 120 up to 150, right? Yep. Consolidates there for about 4 or 5 days and then quickly fails. And then you see those 3 red days pulling back down to 1. It's almost, I wouldn't say identical, but it's very, very similar to what just happened here, right? End of March, we go from 1 to 3. We consolidate for 5 to 10 days. And so in the last 3 days, they almost look exactly the same as the 3 days that it pulled back in February. So for me, I made a little bit of money on yesterday, so that on the second red day there, but I didn't hold overnight just because I've been scared about holding the stock overnight. But once it started gapping down this morning, it made me realize this is doing exactly what it did in February. So immediately out the open, I got short, risking red green, assuming it's going to work exactly because it's not going to work exactly like I want it to, like it did in February. Then I don't want to be in. So I was having strict thesis that if I get short out of the open, it should panic right away. Exactly what happened. Panic straight from the 240s down to the 2 teens. And once it started turning a level 2 between like 212, 215 area, I then hit the ask on 218, and then that was that. That was my play for that day.
Yeah, that's great advice there. One last ticker I'd like to go over, which just kind of symbolizes how crappy some penny stocks are, is BIOC. So this one has ran multiple times last month, and every time it runs, they have an offering. So yeah, you guys, I know, Kyle, you want to make a point about the offering, but 2 days ago on, what's that, the 14th? Yeah, the 14th. That was the day after its big run, and it started gapping down. And I'll let you guys take it from here. What'd you do? What were your thoughts? How'd you play it?
So for me, go back to the intraday the day prior on the green day on the 13th. Yeah, this day right here. So I originally was short this day only because I knew how crappy this stock was from the past. Like I didn't expect a midday offering, but I knew they were dilutive, right? I knew they had shares to sell. So, and more importantly, if you look at the daily chart, the last big run of the volume where it ran, at the beginning of March into the 60s and 70s, like that's clear resistance. And I think on March 3rd, it looks like right there, it topped out at like 69, right before 70 cents. And so if you look at the intraday 2 days ago, it topped out right at 68 cents, right? So I don't play short into resistance plays too much, but when I recognize them and they go and they align with what I already like to trade, which is shorting a dilutive ticker that's already overextended, it kind of puts now two setups into one where the odds are much higher. So I did start getting short in the, I think around 60, 61-ish, after it did fail at 69, expecting it to then pull back even more to the low 50s. We did unfortunately hold about at 53, 54-ish. And then we started, bouncing midday. So I cut it. I did lose like $100, but I was fully prepared for the next day because I knew, it still has that 69 resistance. So if it can't break that, we're going to have a first red day. And so I did short pre-market just to start because I wanted it to spike. Ideally wanted it to, like the same thing as WORX. I wanted it to spike into red green to take more size. But then pre-market, we have the offering. So I'm already short like 300 shares, or not 300, 3,000 shares. And we have the offering. So I know I'm going to make money, but unfortunately, I'm not going to get any size. And so I remember looking at the offering quickly and I read the words at the market. And so that means they can sell shares at any price they want. But you have to look closely because not all offerings are like that. It said at the market offering at 46 cents, right? If it was just at the market, it would have been, okay, they can sell whatever price they want, but it's kind of a different word of verbiage where they're saying at the market, but at 46 cents. So at 46 cents is where the offering was. So like I said, I was short, 3,000 shares and they had the offering price. And it took me a while to realize like it wasn't an ATM, it was at 46. So when an offering's at a strict price, it's likely just going to trade around that all day. And that's exactly what happened, right? So once I realized that, I just covered right at like 45 something, made $300, a very small win. Fortunately, I wanted more size, but again, when an offering happens, like, it's just easy money. It's gonna panic like it did very quickly. And like I said, if there's a strict offering price that's set in, it's just gonna trade right around there all day. So you can just cover because it's not worth holding any longer.
Yeah, solid. Does offerings, do they play a large role in, either of your trading? Or are you guys more focused on the technicals? And if you get caught in an offering when you're on the short side, it's just kind of the bonus?
For me, it's just a bonus. I don't really try to play games of guessing if a company is going to do an offering. I think it's too hard to tell unless if you're a good swing trader, you want to swing these for a long time, you could probably catch a lot of offerings. But for me, I'm really trying to stick to main day. I don't like swinging these too often. So if I do catch an offering, it's because I was short pre-market. That's really how it goes. Maybe a couple midday offerings here and there, but I've never got short for one of those.
What about you, Jack?
For me, I actually don't do too much fundamental research. I haven't I've probably caught in like 3 or 4 or 5 offerings in my life. And it's just a bonus for me, honestly. It's just, I know when a company could potentially do an offering because they'll have S forms out. So you can kind of see those in the filings, I'll hear people talking about them. So I know that, there's a little bit higher of a chance that they'll do it. But other than that, it's nice when they do it because it's a big slam and then you just get to take your profits.
I love it. Well, that's all I had, for this episode. So before we wrap this up, is there anything, either of you want to say just to close it out before we pick this up again next week?
I like this. This is cool. Reviewing my trades makes me, obviously a lot of people are going to learn stuff from this. And me talking to myself through the trades makes me just more review to make it better for next time. So I definitely enjoyed this. This is cool.
Yeah, I agree with Kyle. It's very cool. I think a lot of the things that I do is very confusing, and it's not like a lot of my trading isn't too textbook because I've definitely put in a big art kind of aspect to my trading this year, whereas I was kind of trading a lot more textbook last year. So it's hard for me to kind of explain things sometimes, but hopefully you guys can learn some stuff from me, from just some mindset stuff and just some technical stuff from next few episodes. So I'm looking forward to it.
All right. Thank you, guys. I think a ton of people are going to learn, and I'd love to see, if any of the listeners out there have specific stocks that, maybe they want us to check out, and Jack and Kyle can weigh in on their opinions, let us know. And, we're looking forward to seeing you guys next week. Thank you so much for watching this entire episode, and make sure you follow both Jack and Kyle on Twitter and check out Steady Trade's main episodes, which come out every Tuesday on all podcast platforms and YouTube. When in doubt, check us out on SteadyTrade.com. Going forward, our plan with these episodes is to focus more on 1 to 2 stocks and dive deeper into each of them. So if you guys are seeing any stocks that you want us to talk about, check out, please hit us up on Twitter or on our forum on SteadyTrade.com. And I can't wait to see you guys next week.